Bitcoin remains on sale, and plebs, or at least influencers, are bickering about it. And I even heard someone on a prominent daily podcast claim that we're actually in a bear market, or at least that we are not in a bull market, which I kind of find hard to believe considering the price of Bitcoin is up more than 100% year to date. But we'll get into all of that and more on this episode of the Bitcoin Bulletin Podcast. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers. It has been a drizzly day here on Florida's Space Coast, which is actually kind of a nice break from the almost 100-degree blazing hot sunny days that we had for the last couple of weeks. Actually, yesterday was pretty overcast as well, too, which is interesting. Actually, it's not interesting. It's good because I spent yesterday evening in an outdoor stadium in Orlando, Florida, the stadium formerly known as the Florida Citrus Bowl. It's currently called Camping World Stadium, for what was a pretty epic concert. It was the Cheap Trick, Journey, and Def Leppard Stadium Tour. And those guys are getting up there in age, but they still put on one heck of a show. What that means, besides the fact I was having just a heck of a good time and actually didn't get sunburned because it started late enough in the afternoon and it was nice and cloudy out. But it also means that this episode of the Bitcoin Bulletin Podcast is coming to you a day late. I was able to make my DCA Wednesday stack on time. So far, that's an unbroken streak. Even when our episodes have come out a day or so late, I've always managed to make sure that I do my DCA Wednesday stack on Wednesdays. But even with a break in the concert, or even trying to record before the concert kicked off, there was zero cell data where I was sitting. I mean, it is a big, old concrete stadium. It was built actually during the Great Depression as part of the New Deal, one of those make work projects they had in the 1930s during the FDR administration, when they built lots of just dams and various projects just as part of the New Deal, part of the make work programs to try and keep Americans employed during the Great Depression, which, if you know anything about history and anything about economics, you know was actually what could have been just an 18-month drawdown turned into a decade-long depression because of government interference and central planning. But one of the things we got out of it was this stadium, and it's actually a pretty nice stadium considering it's almost 100 years old. But as I mentioned in the intro, I am coming to you on a Thursday instead of a Wednesday this week. But as I mentioned, I did make that DCA Wednesday stack on time. So before we get into the news and before we get into the DCA Wednesday stack, let's take a look, our customary look at the vital statistics. Currently, at the time of this recording, we are sitting at a block height of 851,774. Of course, when I did my stack, we were at a block height of 851,629, so a little over 100 blocks have passed since then. Currently, Bitcoin is ringing in at a US dollar price of $57,240, and that is cool because we were able to make one of the cheapest DCA Wednesday stacks that we have made in a long time. Currently, that $57,260 now. It's changed a little bit while I've been talking. It's going up. $57,280 will currently get you a stack of, wow, it's just climbing, $57,300. Will currently purchase you $1,745 for every filthy fiat dollar that you convert into Bitcoin. Bitcoin's price gives it a market capitalization of $1.13 trillion. So still well above the $1 trillion mark that we like to see. That I like to say makes Bitcoin not a world-class asset in the minds of the normies, but as I've said on numerous occasions with my right stuff quote, human psychology, people like nice round numbers, they like magic numbers, and $1 trillion seems to be, that magic number. $950 billion just doesn't have the ring to it that $1 trillion does. And so as long as we're above that $1 trillion mark, that's fairly significant. And even if we haven't seen Bitcoin bottom out in this correction, it's still doing pretty darn well. Speaking of Bitcoin's price, for those of you who value your wealth in shiny yellow rocks, it'll currently cost you 24.1 ounces of gold to purchase just one Bitcoin. So still a heck of a lot of shiny yellow coins per Bitcoin. Since the last DCA Wednesday episode, we saw a Bitcoin mining difficulty adjustment. We actually had a fairly significant difficulty decrease of 5%. That is one of the largest difficulty decreases we've seen in a while. But since then, it looks like hash rate has gotten back on track because depending where you get your data, we're looking at an increased difficulty adjustment, an increase in the difficulty that it takes to mine the next block of between 1.5% and 2%. And that still 994 blocks away. So that won't happen for a little more than a week now. It looks like that's going to happen on July 18th of 2024. And that is because blocks are currently coming in at an average time of 9 minutes and 48 seconds. Obviously, that is faster than the 10-minute average that the Bitcoin Core Protocol is aiming for. So if that continues for the next 994 blocks, we will see a slight difficulty increase. Of course, if you're an average pleb and you're just making transactions online, the difference between 9 minutes and 48 seconds and 10 minutes for a transaction is fairly negligible. So, that really only matters if you're mining at home. Of course, if you're a large-scale commercial miner with thin margins, every bit counts. So, 1.5% to 2% less Bitcoin coming in, makes a little bit of a difference. But for you and I, the average pleb, that isn't something that really we should find ourselves worried about. Bitcoin's current price also means that if you value your wealth in pizza, you will currently be able to purchase approximately 3,200 large pepperoni pizzas from Papa John's. That is still a pizza every day for more than 8 years, almost 9 years worth of pizza. That's down a little bit since we've had this retracement, but still a heck of a lot of pizza for just one Bitcoin. And that statistic that has been my favorite statistic for most of the existence of this podcast, Bitcoin's 24-hour average transaction rate, is actually kind of humming right along. It's up quite a bit from where it was last week, despite the fact that price action is still down. Currently, we're looking at an average of 8.32 transactions per second, and that's up from yesterday when I did my DCA Wednesday stack. I took a screenshot of those stats, and we were averaging 7.34 transactions per second. Of course, maybe that's why we're watching the price tick up as we speak. Bitcoin's up, $100 or so since I just started talking, since I just began this podcast. And speaking of on-chain, Clark Moody's dashboard is showing that we also have an increase in the number of transactions pending. There's currently 131,116 transactions pending in Clark Moody's dashboard. That is up 11,000 transactions almost from last DCA Wednesday. And even mempool.space, well, they're telling a slightly different story. They're saying there's 180,159 transactions in their historically slightly larger mempool. But still a slight increase in transactions pending over last DCA Wednesday. And that makes sense because we're also looking at slightly increased traffic, or significantly increased traffic, as the case may be. Despite that fact, if you need to make an on-chain transaction, fees are actually quite reasonable right now. According to Clark Moody's dashboard fee estimator, if you want to guarantee that your on-chain transaction is included in the next block, you can do so for just a fee of 7 sats per VByte. That is a lot cheaper than we've seen in quite a while. And if you have up to a day to wait, they're saying just 6 sats per VByte will slide in there within 24 hours. And they say even a fee of 5 sats per VByte will be mined within a week. Mempool.space is recommending a fee of 6 sats per VByte, which works out to 48 cents at Bitcoin's current US dollar value. And they're recommending that whether you want to guarantee your transactions mined in the next block or even for a low priority transaction. They are saying, however, that a fee of 4 sats per VByte is the lowest fee that you should include for a no priority transaction. And I'm just scrolling through the block explorer here, and the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, the last 10 blocks in a row all have included transactions with fees of 5 sats per VByte. In fact, the most expensive transaction to be included in the last block, which came in about 10 minutes ago, was 59 sats per VByte, which that was a normal fee for a high priority transaction just a couple of weeks ago when fees were spiking. We saw over 100 sats per VByte a couple of times. People tend to overpay for really important priority transactions. Sometimes we see 1,000 sat per VByte. Sometimes people fat finger it and we see fees in the millions of dollars worth of Satoshis, but I don't recall the last time I saw a block where the fees were so cheap, for the entire spectrum of fees, not just the lowest fees at 5 sats per VByte, but the most expensive fee of just 59 sats per VByte. So that's pretty cool. I've already gotten into the whole difficulty adjustment thing. I'm scrolling through my notes here because normally I have my notes set up of what I want to talk about, and my notes are I like to keep my notes accurate. So even though this is coming a day late, so that I can reference next Wednesday, the previous Wednesday, or a couple Wednesdays back, I went in and filled in the blanks for all of the statistics as they were yesterday, not necessarily where they are now. So I'm just going to scroll past most of that because that's old data. Before I get into the news, though, I do want to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Fountain, for example, will let you earn Satoshis for listening to your favorite podcast content. That is kind of random. Sometimes you get Satoshis, sometimes you don't. The last 2 or 3 days in a row, I've gotten between 40 and 60 Satoshis for just listening to podcasts, which, that doesn't seem like a whole lot, but, I hearken back to the days of the Bitcoin faucets where you could get 5 Bitcoin just for visiting a website once a day. And, that was nothing at the time. People would laugh at that. So one day, we don't know what the price of Bitcoin will be eventually. Nobody has a crystal ball. But if Bitcoin does go to the moon and achieves like dollar sat parity, then, $30 to $60 for listening to a podcast is pretty cool. But the most important thing about Podcasting 2.0 is it will let you help support those podcasts by sending some of those Satoshis back to your favorite podcasts. And you can do so in one of 2 ways. You can do so on a per minute basis where you set it and forget it. You say, I think my favorite podcasts are worth 1 sat per minute or 10 sats per minute or 100 sats per minute. And it'll just stream Satoshis in real time to the podcast you're listening to as you're listening. What happens to be the most popular and is my favorite method, however, is the boost method, where you're basically sending a Lightning transaction as a shout out. You send a message saying, hi, or what you think about about the episode you're commenting on, or sometimes people use those boosts, those shout outs, to announce an upcoming Bitcoin meetup, or even the birth of a child. I've seen all kinds of crazy things mentioned in boosts on other podcasts. But because that boost is a Lightning transaction, you're sending some Satoshis. So you're giving value back to the podcast that you're listening to. And we do have one boost to read. That's from longtime supporter of the podcast, Leggy. Leggy boosted 3,000 sats and simply says thanks. Thank you, Leggy. Leggy also sent me an email, contacted me, letting me know a couple of weeks ago he had sent a boost saying, let me try something. And I was curious to what that meant. And Leggy sent me an email. I don't know if that's something they intend me to discuss on the podcast. So I'm not going to get into what the content of that email was. But they did let me know what they were trying, and they gave it their best shot. But apparently, something happened, and it didn't work out the way they intended to. But it was really cool. They tried to help the podcast out in a way other than simply supporting us through boosts. So thank you for that, and thank you for letting me know what you tried to do. I did click on the link, and I did see what you had sent. Again, I'm dancing around the subject here because I don't know if that was for public consumption. So thank you for your experiment, and thank you for the boost. Thank you for being a longtime supporter of the podcast. Speaking of our supporters, our geographic distribution of listeners has not really changed. Once again, it remains kind of ossified. The United States is still number one, where more than half of you are listening. We did pick up a couple more listeners in the United States, but it wasn't enough to shake up the rankings. So thank you to all my fellow Americans, regardless of where you're listening, whether you're listening here in the sunny, not sunny anymore, I guess it's nighttime, Space Coast of Florida, or whether you're listening, in Texas, California, Idaho, wherever you may find yourself. Number 2 remains Argentina. They've been number 2 for as long as I can remember, and that is super flattering because Argentina, as Andreas Antonopoulos used to say back in like 2015 and 2016, when he was doing his videos, when he was really really active with his talks, with being at Bitcoin conferences, etc. And he would always say, when he talks to people in the United States, he has to explain what Bitcoin is and why they should use it, why they should want to adopt a Bitcoin standard. But when he would go to Argentina and talk to people in Argentina, he didn't have to explain to them why they should, be into Bitcoin. He just had to explain how, because people in Argentina got it immediately because they've seen their currency devalued, hyperinflate so many times. So muchos gracias, amigos in Argentina. Thank you for listening in such large numbers that you remain the number 2 country by listenership. Number 3, as also seems to be, as always, has been for most of the history of this podcast, remains Germany. So Dankeschön, mein Freunds in Deutschland. Guten Abend, because it is definitely evening here in the United States, although it's much, much later in Germany right now. Number 4 has been Canada for the last couple of weeks. So hello to my friends up north in the 51st state. Thank you for listening, where the weather is probably just absolutely gorgeous right now. Certainly not as hot as it is here in Florida. Number 5 remains Luxembourg. So Morien to those of you speaking Luxembourgish, something that we learned through a boost from Leggy when they told us how to say hello in Luxembourgish. For those of you who don't speak Luxembourgish, then Dankeschön, mein friends in Luxembourg. Number 6 remains Spain. So hola, muchos gracias, amigos in Spain. Number 7 remains the United Kingdom. If you remember, the United Kingdom had climbed out of the number 11 position to the number 7 position a couple weeks ago, and there they remain. So hello to our cousins across the pond in the United Kingdom. Thank you for listening. Number 8 remains Venezuela. It is incredibly flattering that we have so many listeners in Venezuela. So again, hola, muchas gracias, amigos in Venezuela. Once again, another country where a lot of people don't have to be told why Bitcoin is important, just how they can use Bitcoin, what it takes to become a Bitcoiner. So thank you to those of you in Venezuela who are listening, and hopefully you're helping to orange pill your friends and family. I know there's been a lot of talk on social media about there's even American Hodl basically said something along the lines of real Bitcoiners don't try to orange pill their friends. Or maybe it wasn't real Bitcoiners. I forget the gist of his tweet, but basically the implication was that everybody starts out really enthusiastic about trying to orange pill everyone they know. Basically, you're that guy that just won't shut up about Bitcoin at work or at school or wherever, right? And then eventually you kind of get downhearted because you've been trying to orange pill your friends and family members for years in some cases, and some people just never learn. But if you're in Venezuela and you're using Bitcoin, that's really cool. And the fact that you're listening to this podcast is super flattering as well. So hopefully you're still out there helping to orange pill your friends. And perhaps one of the easiest ways you can orange pill your friends is just by turning them onto this podcast. Because one of the things, even more than a decade into Bitcoin now, even with Coinbase and, being mainstream now for several cycles, and with the Bitcoin ETFs, a lot of people still think that they can't become involved in Bitcoin. They can't become a Bitcoiner because they think they have to buy a whole Bitcoin. They think they have to come up with $50,000 or $60,000 because that's the price of a Bitcoin. And one of the things we've shown during the almost 3 years now that we've been doing this podcast is that just $20 a week is more than enough to build what will one day be a stack of Bitcoin that will be more than the average person in the world will ever hope to be able to achieve. And I'm getting off on a tangent, but again, muchas gracias, amigos in Venezuela. Number 9 remains Colombia. Again, another country in the Latin-speaking, the Spanish-speaking world. So it's really, really cool that we have so many Spanish speakers. My Spanish is really, really rusty. I used to speak a lot more Spanish when I lived in Arizona and New Mexico, where A lot more of my friends spoke Spanish, and we had a lot more native Spanish speakers that I interacted with on a daily basis. But languages are kind of a perishable skill. So now, unfortunately, I only speak basically enough Spanish to say muchos gracias, amigos in Colombia, or maybe find my way from the airport to the hotel when I go visit. But thank you. It is super flattering that we have so many of you in Central and South America listening to this podcast in Spanish-speaking countries, or in Spain, for example, which isn't even in the isn't even in the Americas, but is still a Spanish language country. So that's really cool. Again, number 10 remains Mexico. They moved up out of the number 11 spot several months ago and have been hanging on ever since. And that is really cool. So, hola, muchas gracias, amigos, in Mexico, a place I have spent a heck of a lot of time, not just on vacation, but again, when I lived in the Southwest United States, it was just a matter of just walking across the border or driving across the border to visit Mexico. Now that I'm in Florida, it's more like a plane ride, but I've still been to Mexico fairly recently. It's been about a year. But I look forward to going back really soon because I really, I just enjoy Mexico. It's a beautiful country with wonderful people. Everywhere I've been in Central or South America has been just absolutely fantastic. So again, thank you to all of you listening, regardless of where you're listening from, even if your country isn't in the top 10. Australia, you're still hanging out there at number 11. So if you want to move back into the top 10, it probably wouldn't take more than one or two more people listening to break back into the top 10. Maybe turn one of your mates on to this podcast. Hopefully help orange pill them as well and see if you can bump back into the top 10. But again, it doesn't matter whether you're in the top 10 or whether you're the only pleb listening in a country that I didn't mention, because again, if those statistics, I could keep scrolling for dozens and dozens and dozens of countries. And it's very, very flattering that we have so many listeners from all over the world. And I know Bitcoin is for everybody. Bitcoin isn't bound by borders. Bitcoin isn't, issued by any country or restricted to any one country. So it's a no-brainer that we have that. It's a no-brainer that there are Bitcoiners all over the world. But it's flattering that those of you listening from places other than the United States, from all over the world, tune into this podcast. So thank you once again from the bottom of my heart, regardless of where you're listening from. All right, on to the news. Again, at this point in time in the cycle, it seems like the price tends to be the news, and especially since we've had, that relatively large pullback. So in the last month, Bitcoin's down, from its all-time high of $74,000. We dropped down and we're kind of in the mid $60,000 range, backed up to almost 70,000. Again, before dropping down to as low as 53,000. And then one of the things that I kind of think is amusing is there's that 58K gang out there on Bitcoin Twitter. They've been the 58K gang for a while, and they just don't seem to catch a break, because even when Bitcoin broke 58K for the first time, it just kind of blasted right through 58K. And then, when we went up to set the new all-time high at 70, it just rocketed right past 58K without even, if you blinked, you missed it. And then when Bitcoin retraced, it just blew right past 58K again. And then when Bitcoin shot back up into the 60s, it just seems like the 58K price is a price that Bitcoin doesn't like to stay at very long. So, the 58K gang, they're still out there championing 58K Bitcoin. And I know that's kind of a meme, being 58K being the one true price of Bitcoin. But every time Bitcoin blasts right past 58K, whether it's on the way up or on the way down, it kind of gives me a chuckle. I do want to remind you that if this halving cycle had rhymed with previous halving cycles, Bitcoin should be about, it should be actually less expensive than it is now. Bitcoin should have been about 3 times the cycle low on halving day, which would have put it in the $45,000 to $48,000 range. If we look back at the previous halving, the 2020 halving, which happened on March 11th of 2020, Bitcoin had a cycle low of in the $3,000 range. And then it recovered to about $10,000 just before the halving. So about 3x, which, is pretty on par for previous halvings historically. But then we're about, what we had, the halving was on 4/20. So we're about 2.5 months between halvings. So we'll push it out a little bit and say 3 months after the 2020 halving, Bitcoin was still only worth $11,410. So it had gained about 10% in value over the first 3 months from the halving in 2020. And again, that's pretty consistent with all of the previous cycles. And Bitcoin didn't even retake its previous all-time high and eclipsing the $20,000 mark until December 17th of 2020. So 7 months after the all-time high before Bitcoin set a new after the halving, before Bitcoin set a new all-time high. And before we had the ETFs approved and before we set our new all-time high prematurely because of the hype around the ETFs this year, I had said that you shouldn't expect to see a new Bitcoin all-time high for until 6 months to a year after the halving, and that I expected to see Bitcoin reclaim its all-time high around maybe Halloween or Thanksgiving, or maybe not even as late as Christmas of this year, Christmas of 2024. And I was certainly surprised that Bitcoin, thrilled, but certainly surprised that Bitcoin rocketed as high as it did after the ETFs were approved. But again, if we were to follow the norms, we're way ahead of where we should be. If on our halving day, Bitcoin wasn't just 10%, higher than the the consolidation price at $10,000 or wherever Bitcoin bounced around at for quite some time. I mean, we saw 10,000 quite a bit after the 2016 cycle. Bitcoin started out less than $1,000 during the 2016 halving cycle, and then it went up to that all-time high of, depending where you look, $18,000 to $20,000. But then it dropped down and it stayed in the 10,000 to low $10,000 range. And it wasn't really until the rug really got pulled out of it that it dropped below to the $3,000 range. And of course, that was on March 12th of 2020, and that's the day that most of the businesses, that's a couple of days before my business was ordered to close down because of the thing, because of the illness that was going around, because of the hysteria or the government overreach. I digress. The point I'm making is that Bitcoin is doing what Bitcoin will do, and none of us have a crystal ball. I could not have predicted to you that Bitcoin would be doing as well as it is now. I would have fully expected, that we would have crossed halving day in the $45,000 to $48,000 range, and that if we were 10% higher 3 months out, like we were last cycle, that would put us in the $49,000 to $53,000 range. So I guess even with the pullback to as low as $53,000, Bitcoin's right on track with where it should have been, if we're looking for a historical comparison. Of course, most people out there are speculating that Germany is to blame for the dump, the pullback. Other people are saying that, guys, Bitcoin has 5 to 7, 30% retracements, even during the best of bull runs. But, Germany has dumped billions of dollars worth of seized Bitcoin in the last few days. They've dumped so much Bitcoin, I guess the last I heard is that at this rate, there's only maybe one more day, maybe 2 more days worth of Bitcoin dumping before they've completely exhausted the Bitcoin that they did seize. But they have dumped billions of dollars of Bitcoin on the market. And of course, even with hype, even in the heat of a bull run, ultimately price is all about supply and demand. And if there's more Bitcoin available than there are buyers, of course, that's going to depress the price. So it seems, logical that Germany dumping a ton of Bitcoin could be partially responsible for the pullback, but it could, as I said, just be that it was time, because Bitcoin always has, these 30% retracements, 5 to 7 of them, in fact, during every halving bull run. Of course, there's also the ever-present Mt. Gox coins FUD. That has been FUD the entire existence of my Bitcoin history. But this time, apparently, it maybe that this time is different. This time it's really true. The Mt. Gox coins are actually being released. But, whether or not they get sold, whether or not they hit the market is a totally different story. And I guess we won't know until we know. But above all, remember, Bitcoin's basically exactly where it should be if we're looking at a historical precedent. If you loaded up the truck when Bitcoin was at the cycle low, if you just bought as much Bitcoin as you could when Bitcoin is in the $15,000, $16,000 range, you're already sitting pretty. And, if you were expecting Bitcoin to go on a face-melting bull run, remember, we're not to the point where that should have even happened yet. We weren't expecting to hit that new all-time high for 6 months to a year from the halving. That face-melting bull run that we all expect it should still be months away, and I fully expect that we're going to see it. And maybe we'll see it earlier, but maybe we won't see it until this Christmas. But either way, the longer the price is lower, the more sats we're going to be able to stack, and the more sats we did stack when I did my DCA Wednesday purchase yesterday. And speaking of stacking, despite the pullback, the normies have apparently been loading up. At least if you look at the ETFs, the numbers for today are not in yet. But yesterday, the Bitcoin spot ETFs in the U.S. exchanges had a positive flow of $147.4 million, with a big chunk of that going to Fidelity, actually. The majority of it going to Fidelity with $57.8 million. And BlackRock doing only $22.2 million. So that's unusual. Usually BlackRock are the big boys on the block. And of course, Grayscale Bitcoin Trust still had outflows of $8.2 million because, people are still fleeing that ship. I don't know why, if you were one of those people that were actually suing Grayscale before they became an ETF for the ability to dump your shares and get out of Grayscale, why you wouldn't have done so already. Maybe you were worried about accruing a capital gains tax hit. But apparently there's still people that are dumping their GBTC shares. But that 8.2 million was completely eclipsed by the inflows to the tune of a positive inflow of 147.4 million into the Bitcoin spot ETFs yesterday. And the day before that was even better. The day before that, we saw a positive inflow of $216.4 million, with, of course, BlackRock blazing the way with $121 million of that, and GBTC, of course, at the bottom of the pile, bleeding $37.5 million of outflows. But again, even $216 million of outflows is a drop in the bucket compared to $10 or $20 billion worth of sovereign nations dumping their Bitcoin instead of hodling it like you and I would think they would want to do. That's another thing. I do hear a lot of people saying, why on earth would Germany be dumping their Bitcoin? Or why is the United States Department of Justice selling Bitcoin? And I don't know what the laws are in Germany, but I do know in the United States that the government is required to dispose of seized assets. And in some ways, it really doesn't matter. Like if the government seizes your Bitcoin, or they seize your truck, or they seize whatever, but then they sell it for money, they've still taken your property and they're still benefiting from it. The idea is if they take your property and they dispose of it and put it in the general fund, that it gives them, it takes away the incentive for these agencies just to take your stuff to pad their budgets, right? Like if the ATF was out there just seizing everything they could seize and that they got to keep it, that there'd be an incentive for dirty agents or greedy administrators to seize as many assets from Americans as possible. So ostensibly, at least, that is alleviated by the fact they're required to dispose of the assets they seize. So in the United States, for example, eventually they have to sell those seized assets. I don't know if that's the case in Germany or if they had the legal authority to hodl the billions of dollars worth of Bitcoin that they just dumped. Because what a shame. Germany economically is in a precarious position right now. And just imagine how different that situation might be at the end of this bull run, or 8 years from now, 2 halving cycles from now, with the billions of dollars of Bitcoin that they had maybe being worth trillions of dollars, actual real money, even for a country with a GDP as large as Germany's, even for a country with the GDP as large as the United States, that would make a tremendous difference. But nonetheless, what's done is done, and that Bitcoin hopefully is all either completely dumped by now or will be completely dumped in the next day or two. And if that were putting downward price pressure on the price of Bitcoin, then maybe we'll see it pop back up. But again, you should be backing up the truck, not financial advice, and loading up on as many cheap Satoshis as you can. You shouldn't be worrying, fretting why the price of Bitcoin is down. You should be thanking your lucky stars the price of Bitcoin retraced, because I've been stacking as hard as I feasibly can for quite a long time. Not just my DCA Wednesday stacking, but I've been stacking as much Bitcoin as I could, as I can, feverishly. It's not feeling like I'm never stacking enough. And when Bitcoin was over $70,000, and I've spoken about this before, I've been I've got enough Bitcoin that I'm not going to be at the bottom of the heap. Let's just put it that way. But I've always thought, man, if I had just stacked a little harder, if there was some way I could have stacked a little more, now that Bitcoin's worth $75,000, if I'm not getting anywhere near, I'm getting less than half of the Bitcoin I was getting just a year ago for the same amount of fiat, and so all of a sudden when Bitcoin dropped back down into the 50s, instead of fretting, if you were one of those people like me, and I know you probably were because that's just human nature, you should either say, this was my second chance, and back up the truck and load up that Bitcoin that you were just kicking yourself for not having purchased, or thanking your lucky stars that even though you are stacking as hard as you can, that you're going to be able to stack a few more sats than you would have been able to had the price not dipped. On the negative side of the news, this is actually infuriating. If you remember Alex Masinski and his Celsius scam, it gets even worse. Here we are a couple years after that all went down, and you've got the headline on unchainedcrypto.com. Celsius sues users who withdrew $100,000 before crypto lender filed for bankruptcy. The lawsuit comes after Celsius already reached settlements with 1,500 account holders to recover $100 million worth of funds. Yes, if you were smart enough to finally get out of Celsius before they collapsed, they're going to they are suing you. They're at least suing some of you, saying that you got your money out unfairly, basically, in it, and that you got an advantage that the suckers who didn't sell, who didn't bail on Celsius, didn't get. That is just absolutely disgusting. And I don't really even need to get into more of this, just to say, if there was ever a clue that things like Celsius were scams, I mean, how much slimier does it need to get? Hopefully this sort of BS, because scams, there's new scams born all the time. They say there's a sucker born every minute, and the scammers say that anyway. And so, during every bull run, there's always these new scams. If it wasn't the initial token offerings, then it was the yield farming. Who knows what it's going to be next time? But when we do see that face melting bull run, some new scam will pop up, and hopefully this reminder coming years after the Celsius debacle, showing just how slimy these people are that try to get their hands on your Bitcoin. Maybe that's enough to remind people to stay away from the scams. Unfortunately, I feel that, there's enough people out there that they're just uneducated enough or greedy enough that we're going to eventually have more plebs fall for more scams. Hopefully none of you. Hopefully there is no free lunch, that there is no such thing as yield on Bitcoin, that if you give your Bitcoin to someone else, it is not your Bitcoin, and you eventually will lose that Bitcoin. It seems like an almost 100% certainty. Speaking of not your keys, not your Bitcoin, in this case, it's the exchange Relay, who, if you're a European Bitcoiner, you've been able to buy Bitcoin KYC free through the Swiss exchange Relay. I know there's a couple influencers and podcasters who are sponsored by Relay and talk about it, and it sounds like it's been a good service. I'm not comparing it to a scam, but according to a headline on No BS Bitcoin, Relay app users must verify accounts by October 31st or stop using the service. Relay, a Swiss-based app for buying Bitcoin directly to self-custody, announced that all users must verify their accounts by October 31st, 2024. So, not calling Relay a scam. I'm just pointing out that the government is tightening its screws, and that the exchanges are getting more and more regulated, less and less user-friendly. And unfortunately, that's apparently come to Relay as well. And speaking of KYC, another headline on No BS Bitcoin relates to Paxful. If you remember Paxful, that was, I guess there were co-founders, but the face of Paxful that most Bitcoiners are probably familiar with, because he's been all over multiple podcasts and he's made some interesting statements. Ray Youssef, that was they did business more in Africa than anywhere else, but they had to shut down abruptly. And apparently now No BS Bitcoin is reporting that Paxful co-founder Artur Schabak pleads guilty to conspiracy to fail and maintain an effective AML program. The co-founder and former chief technology officer of Paxful Incorporated, Artur Schabach, pleaded guilty to conspiracy to fail to maintain effective money laundering AML programs. So the KYC AML crackdowns continue. No idea if they're coming after Ray Youssef as well. Ironically, Ray Youssef has me blocked on Twitter, and I don't know why, because I've had absolutely no interaction with him. I don't think I've ever commented on any of his posts. Definitely never called him out for anything, although I always got a kind of a skeezy feeling listening to him. He's never done anything to justify that feeling, as far as I know. I have no experience. I don't know enough about him to think that he's a scammer, but he just always kind of rubbed me the wrong way. Just seemed like a snake oil salesman. Maybe it was because he'd been on so many podcasts and was being, on so many influencers shows, shilling and telling, half the time telling you about how wonderful he was, especially after the Paxful shutdown. He went on every podcast he could get on, telling you about how great he was and how hard he was working, how selflessly he was, how much of his money he was giving back to try and make sure everybody was made whole, everybody that could get their money back. He just rubbed me the wrong way. So no word on Ray Youssef, but his co-founder Artur Schabach looks like he is in a heap of trouble. And speaking of exchanges, KYC and heap big trouble. Also on No BS Bitcoin, BitMEX pleads guilty to Bank Secrecy Act offense. Bitcoin exchange and derivative trading platform BitMEX pled guilty to violating the Bank Secrecy Act by, quote, willfully failing to establish and implement and maintain an adequate anti-money laundering AML program. Sound familiar? Just heard that almost exact sentence 3 times in a row. So the screws are tightening out there, at least with the current administrations. I know here in the United States, where we have a presidential election coming up, Bitcoin has become a campaign issue, with Donald Trump and RFK Jr. announcing pro-Bitcoin platforms, as opposed to the current administration of Joe Biden having been horrifically anti-Bitcoin, trying to pass the Bitcoin mining tax, excise tax, a horribly punitive one, using their Securities and Exchange Commission and Department of Justice to go after every Bitcoin service, chasing Bitcoin wallets, etc., out of the United States, creating a hostile environment where, like, for example, Wallet of Satoshi pulled out of the United States. Numerous Bitcoin companies pulled out of the United States, weren't even willing to not even sell Bitcoin to U.S. customers, but even let U.S. customers use their wallets, for fear that just hosting a wallet would qualify them as a money transmitter and get them criminally prosecuted by the United States. So it's good to see that at least 2 of the 3 people running for president are pro-Bitcoin, with Donald Trump promising to make the United States the world leader, the hub of Bitcoin innovation. Quite the opposite of the hooey that we're currently seeing from the current administration. Of course, these charges basically mirror what the co-founders of BitMEX were subject to a couple of years ago, back in 2020, when co-founders Arthur Hayes and Samuel Reed were criminally charged. Still, that was basically the same thing. They were criminally charged with willfully failing to establish and implement an adequate anti-money laundering KYC program. So it's just more of the same. Bloomberg, of course, ran the headline. I think it was in October of 2022. BitMEX founders charged with failing to prevent laundering. Founders of the pioneering crypto derivatives exchange BitMEX were charged with skirting U.S. laws, preventing money laundering, and hit with civil sanctions as well, abruptly sending the price of Bitcoin down. So that was some of the FUD 4 years ago. So the more things change, the more things stay the same. All right, on to what makes today, or yesterday, and every Wednesday special, our DCA Wednesday stack. Of course, it's Thursday, so I've already made this stack, but I'll go over the statistics so you know what happened and where we are. And hopefully you're stacking alongside with us and made your DCA Wednesday stack on Wednesday as well. If you don't know what DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, yesterday was our 155th stack. We've been at this for almost 3 straight years. We began our first DCA Wednesday stack episode on Wednesday, July 28th, 2021. We chose our equal portion of just $20 because I wanted to show that anybody listening to this podcast can stack an appreciable amount of Satoshis, even if you can only come up with as little as $20. Again, this is a you do you thing. Obviously, Michael Saylor isn't out there DCAing just $20. And there are plenty of people listening to the sound of my voice in the United States and Europe where $20 is completely insignificant. But there's also plenty of people listening to the sound of my voice who might not have an extra $20 right now, that scraping up $20 to convert to Satoshis is a big deal. And I wanted to show that everybody, even those of us for that $20 is a lot of money, that it's worth trying, that it's worth stacking, that DCA is a valuable tool, that it is a strategic way to eventually amass a significant number of Satoshis. Of course, our regular interval was weekly on Wednesdays. And so far we've made 155 stacks now. And those 155 stacks brought us a total stack of more than 9.5 million Satoshis, 9,582,272 Satoshis, of which 34,044 of those sats were stacked just yesterday. We stacked at a price of $57,425, which means we got 1,631 sats more for that $20 than we did just the previous DCA Wednesday. And it turns out that was the cheapest that we've been able to stack since February 21st, well before the Bitcoin ETF pump. That was stack 135. So 20 stacks ago was the last time we were able to stack this cheaply. Obviously, if you're also BTFDing, buying the dip in addition to doing your DCA Wednesday stacking, there were times when Bitcoin was cheaper than $57,000. So hopefully you backed up the truck and stacked up some sats. So there obviously were opportunities to purchase cheaper than $57,000 within the last 20 weeks. But if you're DCAing weekly alongside us, this is the cheapest stack that you've made in several months, and that's really cool. Aside from bringing our stack up to more than 9.5 million sats, what it did do is raise our average cost basis, but not by as much as it had been. This did raise our average purchase price by $94.12. So the average cost of our stack is still a bargain at $32,351.39. Obviously significantly cheaper than the current price of Bitcoin. And if Bitcoin just hits $100,000 this cycle, which I firmly believe it will probably do before the end of the year, or at least shortly thereafter, that stack will have a US dollar value of $9,582. 9 million. That's a little optimistic, isn't it? $9,582.25. The Freudian slip in that is because we have 9 million Satoshis. If Bitcoin hits the $1 million mark, which I think it could easily do in the next cycle or two, most people are saying that Bitcoin will only hit a couple $100,000 a cycle and that it won't be until the 2028 halving that we see Bitcoin eclipse $1 million. Nobody knows. I certainly think it will do it eventually, certainly within my lifetime, hopefully, knock on wood. But when it does, even if we don't stack another single Satoshi, our stack will have a value in US dollar terms of $95,822.72. And that would certainly be a life-changing amount of money for a lot of people. Certainly a lot of people I know. Maybe, if they're, like I said, the Michael Saylor types who maybe spend that much on lunch, that might not be an appreciable stack of Satoshis to them. But considering the average American has less than $500 in savings, having a purchasing power of $95,822 is significantly more than that. But more important than that, remember, we're Bitcoiners because we know that fiat is failing. That not just fiat hyperinflates, but some fiats are going to flat out go away, if not all fiats, by the time we achieve hyper-Bitcoinization. And besides just having a savings nest of $95,000, that's currency that will retain its purchasing power when fiats are failing or fiats are going away. It's purchasing power that nobody can take away from you, that nobody can say you can't send it to your friend in another country, that they can't stop you. You could legally send it anywhere in the world. Even the United States You could hypothetically send it to a sanctioned country, and the government couldn't stop you. Will they come after you for violating the law? Yeah, probably. And I'm not recommending you do so, but in theory, you could, and nobody could stop you. And that's the cooler part. Not just that you would have $95,000 worth of savings, but you'd have $95,000 worth of savings that you could flee a war zone with, or that you could send to a friend or relative in need, and that nobody could stop you, that you could cross a border and not have it stolen from you, like it would if you tried to cross with $95,000 in cash or gold bars. And of course, if you remember Fidelity's Jurrien Timmer forecast that he thinks Bitcoin will ultimately hit a price of $1 billion, that's almost impossible for me to fathom, a price of Bitcoin at $1 billion. But then again, not that long ago, when a price of $20,000 seemed like that was the moon. And I wasn't into Bitcoin. I was not a Bitcoiner at the time when Bitcoin crossed the $1 Bitcoin parity. And that's one of my big Bitcoin regrets. I had been following Bitcoin, but I hadn't purchased or mined any yet. My Bitcoin story has, I'm not complaining. It's not an unfortunate coincidence, but I launched a business almost exactly the same time that Satoshi Nakamoto was releasing the white paper. And so for the next several years, that business was every second and every day of my life. It was, you just devote so much time and energy to it. And I had sunk my entire life savings into it. And it's one of those things that it took a few years before I was able to take a breather and dive head first down into that rabbit hole. But I do remember when Bitcoin first hit dollar Bitcoin parity. I thought, that's really cool. Bitcoin's serious now. I didn't foresee Bitcoin going to $50,000, $60,000 a coin. I just thought, if Bitcoin were going to be an alternative freedom currency, the fact that it's a 1-to-1 Bitcoin to dollar value means it's being taken seriously, and it would be easier to use, more natural for people to use. And the fact that Bitcoin might hit $1,000 per coin, obviously, if I thought that at the time, I would have loaded up the truck. And so who knows? To me, then, when Bitcoin first hit $1, it ever hitting $1 million, or ever hitting $1,000 seemed like as weird of a possibility as Bitcoin hitting $1 billion might seem today. So who knows where Bitcoin goes? But if Bitcoin does hit that $1 billion mark that Fidelity's Jurrien Timmer said it will one day, then without stacking another single Satoshi, your stack of Bitcoin, if you've been stacking alongside us every DCA Wednesday, will be worth $95,582,272. And that would turn you into one of those people where a few years ago they were running the headlines, if you'd only invested $1,000 into Bitcoin 10 years ago, you'd be a millionaire by now. You would be a multimillionaire if you had just 9 million sats, if Bitcoin does hit $1 billion. Either way, just where we're sitting right now, our stack of Satoshis is not too shabby, considering that we've managed to squirrel away 9.5 million Satoshis at just $20 a week, converting now a total of $3,100 into Bitcoin. Before I wrap this up, I want to reach out to those of you listening and ask those of you who have not already to help feed that algorithm monster by following us on Twitter. We picked up a few more Twitter followers here and there, but we still don't have that many people following us on Twitter. On Twitter, we are at BTC Bulletin Pod. BTC like Bitcoin, Bulletin, Pod like podcast. And the more followers we have on Twitter, the more people are more likely to see our tweets featured in their feed, in their For You feed anyway. If you're following us, then it's the only way they're going to end up in your following feed. And again, you can also help support the podcast by rating or reviewing the podcast on whichever podcast platform you are listening to. This is going to be a weird week for me. I'm going to be on the road. I don't know what next Wednesday is going to look like. I do have a lot going on. I have some business things going on, and I'm taking a road trip up to southwest Georgia in the next day or two. I'm going up there for an event at the former Fort Benning, which is Fort Moore now, because one of the things communist administrations like to do is rename things, not just demolish history, not just demolish statues, but they like to rename cities. If you remember Stalingrad, Leningrad, etc. leftists like to rename things. And so we've renamed a whole slew of our military bases in the United States recently, including what used to be known as Fort Benning. And if you were in the United States Army and you went to infantry school, you probably went to Fort Benning. But also the armor school is there, and that's where the people learn to drive tanks, etc. And so there's an open house there where they're doing an event, and it's not normally open to the public, but 1 or 2 days a year it is. So we're going up there to visit some friends and family in the military and see what they do at the tank school up in Fort Moore, Georgia. But either way, even if next DCA Wednesday comes out a little late, and I don't anticipate it will, I would have actually probably gotten this. My intent was just to whip out my phone and record, even if it was just a 5 or 10 minute greeting from Orlando version of the DCA Wednesday podcast, with a promise that I would do a more in-depth episode later. But I had almost no cell phone service. Getting back way off tangent here, but a coworker of mine that I haven't seen in almost 20 years apparently is on vacation in Florida, and they were at the concert last night also. And they kept trying to let me know where they were at, so that in between sets we could say, hey, it would have been cool to catch up, be able to see him, since it's been so long. And we worked together really closely for quite a while. So, but I couldn't. I felt really bad because every time I'd look at my phone, I would see that they had sent a message or whatever, and I just couldn't reply. I had no service. And so along those lines, I also could not squeak down an update. And I wasn't even able to send an apology for why the podcast was going to be delayed on Twitter, on X, until I got home and had access to an actual computer or an actual internet. So hopefully that won't be the case. Hopefully everything will go smoothly next Wednesday. But either way, don't forget to stack alongside us next Wednesday, whether our show is on time or not, because we're going to buy $20 of the Bitcoin next Wednesday and every Wednesday, as long as people are silly enough or uneducated enough or dumb enough or greedy enough, or who knows, whatever the excuse is, to keep trading us Satoshis for stinky US fiat paper money. But either way, keep on stacking those sats, you sexy sat stackers.